I would say industry shocking announcements are going to be coming out for LPT this week. We're here to continue to put our agents at the center of the transaction. We're here to reimagine what this business looks like, right? How do we support agents and how do we support teams at the highest levels? How do we solve the problems that the legacy franchise models are failing to solve for agents? And we're going to be making a couple of really big moves related to that here this week. Some additional growth. We've had some big announcements. Three of the top 10 teams in the U.S. Moving to LPT. That'll be coming out in the news.
Good morning. Welcome to another Motivational Monday. My name is Matthew Hodge, Executive Vice President here at LPT Realty. I'm joining you from LPT headquarters here in Lake Mary, Florida, where it is actually 24 degrees this morning. I always like to give you the update on what's happening there for some reason. I'm going to bring in Robert Palmer, founder and CEO, who's joining us from Yellowstone Club in Montana. Hey, Robert, good morning. How are you?
24 degrees
Yes,
here in
yes.
Montana. So
Oh,
we're
okay.
a little, we got you beat by a few degrees still. I thought you might have me today. Like I was hoping we'd be a little warmer than you, but we're at 24 degrees. So
Yeah, it is not comfortable. I don't know why you voluntarily subject yourself to this type of thing, but
oh
to
man,
each
it's
to each their
beautiful.
own.
The snow skiing, I tell you too, that it's like a drier cold. You're right. Like I was talking about this with some friends. Like you get out here and because it's drier, it doesn't feel as cold. Like yeah, I bet you feel colder in Florida at 28 with humidity than we do at 24 here with dry.
100%. Yeah,
Yeah,
100%.
it's
All right.
good.
Well, we're excited to be with you this morning. If you're just joining LPT and Motivational Monday for the first time, Robert and I come on here each week, guiding you through what's happening inside of the market, giving you brokerage updates, and of course, giving you some motivation to make it through your week. And so this week, I want to start off with the market update. We're going to go through the Desi Awards and follow up and kind of the reaction to that, what we've seen the industry do. But I wanted to start with the market update because I know that there was some changes at the Fed chair and wanted to see if you could maybe break that down and kind of how is the market interpreting that and maybe what does that mean for us?
Yeah, so you'll see the beardometer. I have a little more facial hair this morning than I did last Monday. So the announcement of the new potential Fed chair, still has to be confirmed. I would say is we don't know. It's not great for rates. There could have been much better choices that I think would have been more of a sure thing for rates to keep going down. We're gonna have to see what's up with this Fed chair. It's really interesting. So Trump actually passed him over in his first term for Fed chair and went with Jerome Powell instead because Powell had a reputation of being, looser and friendlier to lower interest rates, which we saw during the pandemic. And you guys know my opinion that Powell actually did too much. There was too much easing, there was too much liquidity injected during the pandemic, and so now we're going the other way. And so now we have Kevin Warsh coming in, potentially still has to be confirmed, by Congress, but his reputation is to be a little tighter with interest rates, which is, I would say, kind of incongruent with where the president has been talking about where we want rates to go. He's saying the right things right now, but when you look at someone's history, it's going to be really interesting to see. I'd say the most critical thing that he has come out publicly and said is that he wants to simultaneously lower interest rates while also reducing the Fed's balance sheet. And this is a risk because historically, reducing the Fed's balance sheet is called quantitative tightening, QT, right? When the Fed's balance sheet is expanding, that's quantitative easing. And so we need more liquidity if we're going to drive rates down. So this idea that they're going to be cutting the short-term rates while simultaneously shrinking the Fed's balance sheet. Now, don't get me wrong. I think there are a lot of benefits to a smaller Fed balance sheet. I think there are benefits to that fiscal policy, but it's not what we need right now as an industry to help drive interest rates down, right? We need to get all of these buyers and sellers off of the fence. We need to unlock the handcuffs of those super low sub 3% rates so we can get housing inventory moving. Because I don't know about you, but I am not looking forward and I'm not expecting another year of 4 million annual home sales. We've had enough of that, enough of these 30-year lows. So again, as we look at the overall picture, not terrible news, right? I mean, he's saying the right things. He's going to move in the right direction, but there are some question marks around the long-term impact of this policy decision to shrink the balance sheet at the same time that we're cutting rates. The wins we still have in our column, the 200 billion worth of Fannie and Freddie liquidity injection in the mortgage-backed securities market has continued to hold rates at a fantastic level, even with the 10-year selling off, even with the 10-year moving up. We've seen mortgage rates stay right around that 6% number, which is very good for us. And the big thing we're going to continue to watch is inflation. All eyes will remain on inflation until we get to April or May, get on the other side of the initial tariff bump that we saw last year. And that's when we're going to really know what happens with rates. Because as we talk about a lot here, the only thing that bond investors and mortgage-backed security investors hate more than high Fed rates is inflation. Inflation is the absolute killer for low-term mortgage rates, no matter who's in as the Fed chair. So we've still got to go through congressional confirmation of the new Fed chair. My gut says he probably gets confirmed. We're going to see what his policy decisions look like. Right now, the market is pricing a 90% chance of holding rates the same at the next Fed meeting. And it'll probably be the Fed meeting after that once he's in there and can help kind of rally the messaging and get everybody in line. Because remember, it's not just one person's decision, it's a vote. And it has not been unanimous now for the last couple of months. A lot of division inside of the Fed, but we're moving in that direction. We'll keep you updated. Keep your clients moving. Remember, buy the house now, right? If rates do get lower, we're not going to bank on that, but if rates do get lower, you can always refinance. It is the most powerful option in the consumer's favor in history, right? You decide if you ever want to refinance that rate down, but if rates go up, the bank can't come take it away from you. So you have that one-sided option. Remind your consumers of that. If rates get lower, great, refinance in the future. If rates go up by some unknown force, you're locked in, you're good, you bought the house. But we do still expect to see an increase in home sales into the spring buying season, and we do expect rates to keep coming down. I'm still bullish on the idea of that five handle on rates for the peak of the spring buying season.
Awesome. How would this show up in the headlines? Is there anything that the consumer may start to see that would be a conversation starter for us, or is this just going to be like really industry specific data?
Yeah, so far the headlines have not really leaked over into what I would call consumer interesting news. Like I'm seeing it on the Bloomberg terminal, like traders are talking about it, and I think that's good for us. Because what we don't need is negative headlines right now. We've gotten a lot of positive headlines. The idea of institutional investors not being able to compete with first-time home buyers anymore. The idea that rates are coming down because of Fannie and Freddie's injection. We have seen rates at lowest levels, a couple of points here in the last few weeks. We don't need negative headlines contradicting that. And so I'm hoping that the media stays away from this until we have a better understanding of what the policy is going to be.
Awesome. Okay, cool. Appreciate that update. If you are just hearing this for the first time, each week we kind of break this down. You can go back to the last Motivational Mondays and catch little snippets each time. And so as you hear it more and more, your understanding, your ability to absorb it very quickly will continue to grow. So thank you for that update. That is right, Dave. We do have the Motivational Monday page where you can follow updates and snippets from the show. And then also, Rob, since we're talking about this, I want to kind of talk about the social post that you had over the weekend where you were talking about the DESI Awards and why we did it and what it meant for the people who were serving. Can you kind of share some light onto why you posted that and maybe what that meant?
Yeah, so it's just interesting. We see these quote unquote industry experts put out what I will call misleading headlines. And look, I think our industry has enough issues, right? We have brokerages with bad behavior out there landing in headlines. We have people not taking care of agents. We have consumers getting scammed. It's like, as an industry, we need like positive press. We need to row in the right direction. And so what's happening is there's this headline that says 70% of realtors didn't close a deal last year. And this is based on what I would say is incomplete MLS data. And it's like people like to share this headline. It's inflammatory, but it's not great for us as an industry. And so what we did is we dug in, right? We have access to all of the MLS data in the United States, like 99% of it, almost every MLS in the country. And then we can also see our internal LPT data, right? And so when we did the DESI Awards, we used internal LPT data and we ranked our LPT agents against other LPT agents. When you look at MLS data and you throw out these crazy statistics like, 70% of agents didn't close a deal last year, it's because those agents aren't showing up in MLS data. And so what can cause that? Well, you'd be amazed. We see a lot of listing agents who forget to add the buyer's agent to the transaction in MLS when they close it out. And yet a lot of agents don't take the time to chase that down and get it corrected. So you either have it looking like the listing agent double-sided it when they really didn't, or maybe the wrong buyer's agent gets keyed in sometimes. You have dynamics where on some real estate teams, only the team leader is getting credit, or in some cases, only the team member is getting credit. But we know internally there's multiple agents working on those deals. And so what I just really wanted the general public to understand is this idea that 70% of realtors are not working or not successful or not being productive is a complete lie. It's nonsense. And we can see it in our data, and we know how inaccurate the MLS data is. New construction homes aren't going in MLS. Commercial deals are not going in MLS. Referrals are not going in MLS. And it just really upsets me when people paint our industry in this negative light. And I get it. It's a clickbaity headline, right? And we're in this world now where social media makes the clickbait headlines go viral and, the news outlets get more clicks and reads on their stories. But as an industry, we don't need that negative sentiment. We don't need more negative press coming out of what has been one of the worst housing markets for transaction count, in 30 years. And so I wanted to kind of point that out to a lot of folks and push back against this idea that 70% of realtors are lazy or not working or,
That's right.
it's nonsense. And so we used our access to the data to compare that to because look, we've seen hundreds of thousands of transactions now inside of the LPT ecosystem. I mean, we're
That's right.
top 10 brokerage in the US by transaction count. We see a lot of data. And when we compare that to what's in the MLS, there are a lot of inaccuracies. And again, just making sure that the message is out there that real estate agents work hard. They are serving clients at the highest level. There's more than one real estate agent on a lot of deals now, right? As complexity has increased across markets, you have people working with multiple agents on the same team. You have a listing agent, you have a buyer's agent, and there's just a problem right now with attribution across the MLS data. And we don't need to, again, continue to perpetuate myths that are bad for our industry.
That's right. Yeah, that's right. And something else that I think was kind of interesting is, I was at an event last week on Friday, Lewis and I, and we were asked, why did you choose those categories? And so, some of the inspiration is because not everything that we want to celebrate shows up as a real estate transaction. Sometimes it's about celebrating the hard work that ultimately leads to transactions. But, I want to celebrate, the person who's putting in the effort to do the maximum amount of open houses or doing the most amount of calls or doing those things because I want to celebrate the work, not just the byproduct of what the work brings. And so, that was, I think, a different philosophy because most people just celebrate the end result. How many transactions did you do? What was the volume? Yeah, but what gets you there? And so I thought that was interesting. And, one else thing, while I'm talking about this because it was dear to me, is when I was first in real estate, and I was rookie of the year in my office, it was like, I don't know, maybe 20 agents that started that year. And so
Right.
I won out of that year. And it was really special to me to have won that, even though it was insignificant on a national scale, but to me it was important. And who was also as important to was the neighborhood that I was farming that was in that zip code who was like, hey, this guy is the expert in this area. And so I just think it's such powerful messaging. So when I see people come in and try to discredit what that means, it's really upsetting because I know what it did for me and I know what we are doing for our agents and our entrepreneurs. And, it's just a very poor mindset.
When we have the most accurate data, right? As the brokerage, we process every payment. We know every agent who got a dime on any
That's
transaction
right.
inside of LPT. So, the data is fantastic. It's great that we took the time and built the system in a way that we can celebrate our agents. And again, I'm just, anytime I feel like there's, forgetting even the impact on the desis, anytime I feel like there are these headlines that are going to negatively impact our industry and they're wrong. Again, we have enough negative headlines out there that are right. We don't need the negative headlines that are wrong to get to get tailwinds and to get momentum. And so, and then like to your point, Matt, we talk about productivity. Open houses are being productive. What are the productive activities that a realtor needs to be doing to serve their clients at the highest level? Holding open houses, producing videos for listings, sending out direct mail campaigns. Participating in brokerage-wide educations. And again, that's why the DESI Awards looked into all of those different categories. Our 10 special categories in addition to the geographic awards. It's all about recognizing that productivity where it happens, because our mission is to make sure that LPT agents are serving the consumer at the absolute highest level.
That's right.
And that goes beyond just the closing table, right? How well you write those offers that don't get accepted. The listing appointments you go on where you educate a consumer and you make the decision not to list the property because it's not in their best interest right now. Or maybe their ideas of value are misaligned, or maybe they're upside down and we need to wait for the spring. Like all of that counseling is about being a good realtor, a good real estate agent. And if you
That's right.
just look at MLS data, you miss that. You miss the forest for the trees. And we really took a step back. We try to look at the industry differently. We have more data than everyone except for 6 or 7 other brokerages at this point, and we're going to continue to pass them. So I just feel like it's our responsibility at this point to really be, advocates for the industry as a whole, because our messaging is here to protect agents at every brokerage, not just at LPT. We need our industry to win. We need consumer trust, right? Go back to 18 months ago, we had the NAR settlement around, buyer's agent commissions. That was born out of lack of consumer trust, right? This idea that the consumers as a whole felt like we weren't serving them at the right level. And we're here to change that. And we're focused on it every day. And I know our LPT agents are pushing forward and doing right by their consumers. And we're going to continue to be champions of that messaging and of that guiding principle.
Yeah, that's right, and very well said. And I was watching the Grammys yesterday, and it was the 60th Grammys, and so I was
Yeah.
thinking, man, they've been doing this for 60 years, like putting out these awards, and I thought, man, this was our first one, and I
Yeah.
hope you guys enjoyed it. There's a lot, that we'll do differently, and as we hear the feedback, and we want to improve that experience. But it just made me think of it. 60 years versus our first one. This is where it started. Super super exciting for me.
It is funny, right? When we named Desi, like Emmys, Grammys, like
Yeah.
E's at the end, let you do an award show. Like, and Desi just happened to end with the right vowel sound to have the Desi Awards, which was fantastic. And I got a lot of questions about this, and the tuxedo was not AI, right? I did change into a tuxedo, so I started down here, and I had my tuxedo shirt on under my hoodie. And then when we played the Larry Bird video, I ran upstairs into my office where I had the microphone set up, and we green screened in that great background, and I threw on the bow tie, which I still have here next to my computer. I threw on the bow tie, and yeah, and then came back downstairs, took off the bow tie, put on the hoodie so I could close the show out. But that was a quick wardrobe change. A lot of people are like, man, what software did you use to put the tuxedo on using AI? And, that was the real deal.
Awesome, man. Awesome. Well, we hope you enjoyed it. I've been seeing tons and tons of social posts, and it's great to see people and celebrate along with them.
Big week,
Y-
man.
Yeah,
So
big week.
So I'm gonna be as soon as we finish Motivation Monday, I'm hopping on the plane and going to New York. So we've got Inman this week. We've got a lot of big announcements coming out. I would say industry shocking announcements are going to be coming out for LPT this week. I can't talk about them today. We've got NDAs. There's dates things can be released. We will dig into it all next week on Motivation Monday for the recap. But I would say keep an eye on Housing Wire, keep an eye on Real Estate News, keep an eye on Inman. I'm going to be speaking at CEO Connect tomorrow. I'm on the main stage at Inman for a one-on-one about the success and what we've built here on Thursday. And then at the same time, we're going to have, again, some amazing breaking news about some big moves we are making as a company inside of the industry to, again, continue forward on this mission, right? We're here to push the model forward. We're here to continue to put our agents at the center of the transaction. We're here to reimagine what this business looks like, right? How do we support agents and how do we support teams at the highest levels? How do we solve the problems that the legacy franchise models are failing to solve for agents? And we're going to be making a couple of really big moves related to that here this week. Some additional growth. We've had some big announcements. Three of the top 10 teams in the U.S. Moving to LPT. That'll be coming out in the news. Some of you see me kind of foreshadow that on social media. We've got some massive moves coming in Canada. We've got some massive moves coming on the technology side. So it's going to be a really big week for us, all coming together right during Inman Connect in New York. And just proud to represent you guys every day. I tell this a lot. Like I wake up every day excited to lead this company. And when I look at where we're going and the possibilities for the future and the dynamic range of how we can make a difference in our agents' lives, our consumers' lives, I mean, this is what building an amazing business and being an entrepreneur is all about. And I'm thankful for each and every one of you because without you, without all of our amazing entrepreneurs on this platform, none of this would matter, right? I'm not on stage in Inman tomorrow because I'm cool or whatever. I'm on Inman tomorrow because of all of you, because you represent enough consumers and you do a great job in your communities to catapult us into the top 10 of all brokerages in such a short period of time. And so thank you for that. And just know that I'm proud to represent each and every one of you this week as we make these big announcements and as we make another mark on the industry as LPT Aperture Holdings.
And I know you talk about this, and I know you'll be able to share more next week. But thinking about some of the challenges that we face, particularly in this market right now, and putting tools in place to help our agents succeed through these things, it's different than the way that most, I think, brokerages think about it. They're like, hey, we're here to help you facilitate the legalities of the transaction, and that's pretty much it. Where we're like, hey, we get this is the environment. What can we do to help you navigate these waters and be more successful in this environment? And then when it changes, we'll continue to do the same thing. We'll look at the environment and figure out what can we do to help our entrepreneurs at that time. So I know that you're under NDA. You can't talk about that specifically, but any light that you can give to us about maybe the category of what you're thinking about.
I love it, Hodge. And of course he knows, right? I mean, as an executive vice president here, he knows what's going on. Look, I would say, we're going to be announcing the acquisition of two really impactful technology companies in our industry. We are leaving them brokerage agnostic. I guess that is something I do want to talk about today. So, when we look at acquiring these technologies, while obviously we're going to be able to integrate them into Connect and integrate them into the LPT experience, my intention is not to hurt agents and teams at other brokerages or take things away from them. And we've seen that happen in the past. We've seen other brokerages who will buy technologies, buy CRMs, bring them in, and then they weaponize or they try to use it in a way to force agents to make a move. And that's not who we are. We firmly believe in the idea of agent choice. We want agents to come to LPT because they think LPT is the best platform for them, not because we're trying to force them. And so, as we announce these two acquisitions, it's really important to me, and a lot of the messaging will be around the fact that they will stay brokerage agnostic. They will continue to serve agents and teams at all brokerages at the highest level. And actually, my intention is through capital infusion and our collaboration and cooperation that they get even better for agents across the industry. I have this firm belief that we're moving away from the legacy franchise model. We're moving away from the isolated silos that were created in real estate. And if we go back in time, it makes sense why it started that way. You go back to when listings were in a big printed book, or you go back to when documents weren't digitized. There wasn't amazing software like SkySlope or Dotloop where we could manage 200 MLSs and probably 400 or 500 different boards worth of forms across the country. It made sense for real estate to be so isolated. But as we've seen social media grow and online video grow, and we have agents now serving consumers across multiple marketplaces, and they have access to the data to be experts in those different cities, to be experts in different markets, our model allows us to embrace that and to push that forward. And so when I see amazing platforms out there that are helping with that mission, that are helping agents and teams be more successful and serve clients at a higher level, we're making the strategic decision as LPTA to acquire those companies, invest in those companies, but again, not with the purpose of forcing people to come to LPT, not with forcing people to feel like they're not going to get the best solution there. So my commitment to everyone on those platforms is, as we make the acquisition, we'll continue to invest in them, we'll continue to improve them to benefit the entire industry. And then obviously there is access inside of LPT, and there are things we can do by integrating them with our technology, integrating them with listing power tools, with LPT Connect, but we're not here to take away from the broader industry. So two big announcements will be coming up tomorrow morning around that, along with some additional growth. And again, just a really exciting week.
Awesome, and looking forward to it. Okay, so we are about at show end. We have completed the first month of the year already, if you can believe it. So only 11 more to go. So hopefully you are off to a great start. And if you're not, we want to make sure that you are figuring out where you can put some additional efforts in the right places. So any final messages for today? Since we're down 1 month, we're starting February fresh. What would you say to our entrepreneurs to close out this week?
So I'll say, as a whole, January was a little softer than we would have expected. I think some of the kind of movement around rates in November and December, I think people really checked out last year. A little bit of momentum we saw building when rates dipped kind of earlier in Q4, late Q3. That momentum really kind of stalled out. So we did see a softer January, I think, as an industry in a lot of markets, right? There's obviously still markets that are on fire. But we are seeing the momentum build. We're seeing a lot of consumer interest coming off the sidelines. A lot of these headlines that we've talked about in the news about rates being lower, about less competition for homes, are starting to bring people, off the fence, bring consumers back. We're seeing more folks reach out and hey, I'm thinking about listing. What's the value look like? When's a good time? So the momentum is building. Everything is lining up for us to be in a good position for the spring buying season, in a good position for Boomsday to hit this year. We just have to stay focused. We have to stay focused on doing the work. We have to stay focused on checking in on our people and staying in touch with our sphere and making sure that our consumers know that we're here to help them when the time is right, when it's time to move forward. And I know that can get frustrating, right? We talk about it, coming through a soft January, and it's like we're doing all this work. We're not seeing the results. You have to believe, you have to stay committed, you have to have faith, because we're going to see this pickup. There's only so much time that consumers can kick that decision and kick the can down the road. Interest rates are starting to cooperate. But you've got to keep doing the hard work now. You've got to keep showing up on those appointments. You've got to keep showing up in your open houses. You've got to keep checking in on your sphere and making sure that you're that top of mind agent. And that's the advice I'm going to continue to give, because when the momentum finally hits, when the market finally takes off, it's too late. If you weren't doing the right activities leading up to that boom, it's going to be too late to catch the wave and catch the momentum. You'll be sitting out there on your surfboard floating and have missed the wave. So keep doing the work. Stay focused. I appreciate each and every one of you. Keep your eye on the news. Keep your eye on Inman. We're going to be making big moves this week across the LPT ecosystem. And we'll see everybody back here next Friday for another amazing Motivational Monday.